Stop scrolling for a second. What I'm about to explain is something most people never hear until their bank access suddenly changes, without warning or explanation. I'm not here to scare you. I analyze financial systems for a living, and what I see happening quietly right now deserves attention, especially if stability matters to you. If content like this helps you think clearly instead of emotionally, subscribe to Smart Money Signal. This channel exists to decode systems, not hype headlines. Let me be clear early. This isn't about market crashes or get-rich ideas. It's about access, control, and how money systems behave under pressure. Most people assume their money is always available. That belief feels safe, but it's based on convenience, not on how banking systems are actually designed. Banks don't operate like wallets. They operate like systems with rules, triggers, reviews, and delays that activate long before anyone panics publicly. I've studied past freezes, limits, and access restrictions. They rarely start with bad news. They start quietly during normal days with normal customers. The first sign is usually small. A transfer takes longer. A withdrawal gets reviewed. A card suddenly needs verification for no obvious reason. People usually dismiss this as a glitch. They assume customer service will fix it quickly because that's how things work during calm periods. But calm periods are exactly when systems prepare for stress. That's when rules are tested, thresholds adjusted, and exposure quietly reduced. What most people don't realize is that banks are legally allowed to delay access under specific internal and regulatory conditions. These conditions don't require fraud. They don't require wrongdoing. Sometimes they don't even require unusual behavior from the account holder. Systems look for patterns, not people. They flag accounts automatically without considering personal situations, emergencies, or timing needs. If you rely on fixed income, timing matters more than balance size. Delays of days can feel longer than losses of dollars. This is why access risk is more dangerous than market risk for many people, especially those no longer earning active income. I've noticed most financial conversations ignore access entirely. They focus on growth, returns, and performance charts. But charts don't pay bills. Access does. And access is controlled by systems, not by account holders. When a review starts, your balance still shows. That's what makes the experience confusing and stressful. The money isn't gone. It's simply unavailable. And that distinction matters legally, but not emotionally. Customer service often can't help at this stage. Frontline staff don't control system holds or compliance reviews. This is where panic usually starts. People argue, escalate, and stress, unaware that time is the only variable left. Weekends and holidays make everything worse. Systems pause, but restrictions don't. Time stretches while access stays frozen. I've seen this pattern repeat across different institutions, countries, and economic cycles. The trigger is rarely one big event. It's usually cumulative pressure, building quietly in the background. That's why I focus on systems, not predictions. Systems repeat behavior even when headlines change. Many people believe insurance guarantees immediate access. That belief is dangerously oversimplified. Insurance often addresses loss, not timing. And timing is the real risk during financial stress. I'm not saying banks are evil. I'm saying banks prioritize stability over convenience when pressure increases. Stability for systems often means slower movement, tighter controls, and reduced flexibility for customers. This doesn't happen overnight. It happens step by step, policy by policy, quietly. The most dangerous moment is when people realize rules exist that they never read. Most agreements allow delays, limits, and reviews under broad language most people skip. I'm explaining this because awareness removes shock. Shock is what causes bad decisions. When people understand structure, they stay calm. Calm people make fewer mistakes. I'm not here to tell you what to do. I'm here to explain how things actually work. Ownership and access are not the same thing. That's a hard truth many learn too late. You can own money and still temporarily lose access to it. Systems allow that. This reality changes how you think about financial security. Security isn't just about amounts. It's about availability under stress. The next financial strain won't look like the last one. Systems evolve after every crisis. Rules change quietly. Thresholds adjust. Language updates without headlines. People who rely only on past experience often feel blindsided. People who study systems feel prepared. Preparation isn't panic. It's understanding. I analyze these patterns because repetition reveals truth better than opinion. The same behaviors appear again and again across institutions. Slower access, a higher scrutiny, reduced flexibility. These are not rumors. They are documented system responses. The earlier you understand this, the less fear you feel when others panic. Fear thrives in confusion. Clarity removes it. This channel exists to provide clarity, not noise. If this perspective helps you, subscribing to Smart Money Signal keeps you connected to calm, system-based analysis. I don't predict dates. I don't hype disasters. I explain mechanics. Mechanics don't care about emotions. They operate consistently. That consistency is what makes them predictable once you understand them. Many people ask why warnings never come early. It's because systems don't announce adjustments. Adjustments are internal. Customers feel them later. By the time headlines appear, rules are already active. That's why awareness must come before urgency. Urgency causes reaction. Awareness creates control. Control doesn't mean power over systems. It means emotional stability within them. Stability allows better choices during uncertainty. I've seen calm people navigate restrictions better than wealthy people. Wealth without understanding creates stress. Understanding without wealth still creates calm. That difference matters more than most realize. This isn't about abandoning banks or fearing institutions. It's about respecting how large systems behave under pressure. Pressure reveals structure. Structure reveals priorities. Priorities reveal outcomes. When you see the chain clearly, fear fades. I want viewers here to feel informed, not alarmed. Alarm benefits algorithms. Information benefits people. That's the difference I'm committed to maintaining on this channel. If more people understood access risk, fewer would panic during delays. Panic always makes situations worse. Calm buys time. Time creates options. Options create stability. Stability is the real form of security. This perspective isn't popular, but it's necessary. Necessary information often feels uncomfortable at first. Comfort returns once clarity settles in. That's the goal here. No hype, no fear loops, just system awareness. If this video helped you think differently, that's a win. Thinking differently changes outcomes over time. Outcomes shape lives quietly, just like systems do. I'll continue breaking down these mechanics as they evolve. Not to predict collapse, but to reduce confusion. Confusion is the real enemy during financial stress. Understanding removes its power. That's why this channel exists. Smart Money Signal isn't about money tricks. It's about understanding signal systems send before people notice. If that mission resonates, stay connected. Subscribe to Smart Money Signal for calm, clear system analysis. Awareness creates time. Time creates options. And options create stability.